at the time of establishment, the authorized capital of RBI, any financial institution, if they are operating, unless if they don't have any authorized capital, so how they are raising the capital? The 10 director from the various field, there are different field like agriculture, industry, the director which is related to RBI. Whenever the international transactions are going, somebody want to be a custodian. So now here for international transaction, RBI is a custodian. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 2, Session 1, second semester, Law and Practice of Banking, second semester BCom, which is related to Reserve Bank of India, which is nothing but your central bank. Okay, moving forward my agenda. Today my agenda, RBI, how the introductions of RBI and the constitutions and nationalizations and organization structure and the main functions of RBI. RBI, we call it as a central bank. So the entire, in India, what and all, the bank is operating with the help of RBI, which is a main bank. So moving forward, so the introduction, how it is, RBI started, the central bank, why it is very important for our nation economical development. So the Reserve Bank of India, cheaply known as RBI, shortly we call it as the Reserve Bank of India. So is the India central bank or regulated body responsible for regulation of Indian banking system. In India, how many banks are which is related to nationalized, scheduled bank, non-scheduled bank, everything the RBI is taking a control. So just for controlling, so they want to make some policy which is related to banking system, so Indian banking system. So according to Indian banking system, RBI is taking a main responsibility. It is under the ownership of Ministry of Finance, the Government of India. Because the Government of India, under Government of India, in India country, so how many bank is operating, okay? So everything, the RBI is taking a whole responsibility. So here the Ministry of Finance completely which is related to financial concept, the bank is related to financial instrument. So that's what the RBI is taking a responsibility under the guidelines of Ministry of Finance, Government of India. It is responsible for issue and supply of Indian rupee, because not even a single bank, they don't have any rights to go for printing currency. Okay, so only RBI is a responsibility to issue and print the currency which is related to Indian currency. It is also manage the country main payment system and work to promote the economical development. So in India, there are central government, state government, they try to commit for number of payment which is related to infrastructure or development. So the economical balancing, so based on the RBI, okay, the government is committing for the expenditure for improve the development, okay, or infrastructure. So that's what, which is a main payment system. The RBI is not only paying for the government payment, even the RBI is paying for the development, agriculture, industry. Moving forward, so in the year of 1926, the Hilton Young Commission recommended to set up the Reserve Bank of India, because the Reserve Bank of India in the year of 1926, so you must remember the Hilton Young Commission recommended. So then only the RBI is taking a responsibility. They frame the policy which is related to banking system. So the RBI is established in the year of 1926. The Reserve Bank of India was established following Reserve Bank of India Act 1934. So in the year of, they recommended in the year of 1926, but which is the new Reserve Bank of Act which is passed on in 1934. Okay, next, through privately owned initial, because the privately they want to take a responsibility which is a private control. The RBI is having a control, complete control. It was nationalized in the year of 1949. Okay, which is completely in our country. Nationalizing means what? So throughout the state, RBI is located one at least branch, the head office. Okay, so the complete control which is taken in the year of 1949, and since then fully owned by the Ministry of Finance and the Government of India, which is fully owned. So complete control taken by the Ministry of Finance and Government of India. So at the time of establishment, the authorized capital of RBI, any financial institution, if they are operating, unless if they don't have any authorized capital, so how they are raising the capital? So India, 5 crores. So at the time of initial stage, the authorized capital is required. The capital you can expect the RBI is rising for 5 crores. The government share in this was only 22 lakhs only. So out of 5 crores, the government share is only for 20 and 22. The remaining is they rise with the help of private. Moving forward. So now next agenda, which is related to nationalization. So because unless the RBI is not nationalizing, so which is related to nation or country, so based on the nationalizing concept, what exactly the criteria which is required? So the central office is where the governor set and where policy are formulated. The RBI governor is appointed. The central authority is taken by the governor. Okay. So some policy which is related to banking system, which is related to guidelines, which is related to implementation policy. So the central office of the Reserve Bank was initially established in the Kolkata. You can identify. So in the Kolkata central office is located, but was permanently moved to Mumbai in the year of 1936. So at the time of starting stage, the central office which is located in the Kolkata, slowly which is moved to Mumbai. The RBI is established in the year of April 1st, 1935. So which is completely established. So which is exit for 1934, but which is established in the year of 1935. So April 1st. So accordance with the provisions of Reserve Bank of India Act 1934, because complete banking system, so there is one act is required which is related to RBI Act in the year of 1934. So next, the organization structure. Each and every organization, enterprise, something like the functional structure, how it is located, how it is designed, so how it is working. So based on the organization structure, the Reserve Bank affairs are governed by the Central Board of Directors, because our RBI is, which is always a central authority. So there you can find the Central Board of Directors are appointed. So the board is appointed by the Government of India in keeping with the RBI Act. So whenever they are trying to appoint for any board of director, so based on the RBI operation, so completely the RBI Act they want to follow. So appointed and nominated for period of 4 years, not more than 4 years. So they appointed for director and nominated. So minimum years 4 years. The maximum also 4 years. Okay. So the constitution, so which is related to board of director constitution. So here official director is very important. So the full time, the governor and not more than 4 deputy governor, one main governor and more than 4 deputy governor. So under this structure, which is those people are working. So non-official director, so here nominated by the government, the Central Board of the India. Okay, so the 10 director from the various field, there are different field like agriculture, industry, the director which is related to RBI, so which is a non-official director, and 2 government official. Okay, so those who are working in the government, so they want to be an year official, and other 4 director, 1 each from 4 local body. So in the local body, they want to appoint for 4. So under organization structure, so how with the flowchart is looking. So the main power and responsibility governor are taking the responsibility. So which is delegated to deputy governor. Okay. So now again you can find the executive director here, and the principal chief general manager Okay, under principle of the general manager, chief general manager are working. So under chief general manager you can find, so again the deputy general manager, then assistant general manager, and the manager and assistant manager and supportive staffs, because which is a set of team which is not only with the help of a governor only, which is completely not operating. There are too many persons are involved. So to reach the predetermined goal, RBI, which is completely based on the Indian banking system, which is working. So the main functions of RBI, which is an expected question, 100% expected question. So the first main function, the currency regulator and bank of issue. Currency regulator, because we can find out which is related to currency, inflation, deflation. Okay, if they want to print currency or print currency based on the deflations. Okay, so complete RBI is taking a held responsibility for printing the currency, again which is based on the governor's guideline, so which is monitor based on the, which is operating based on the regulator. And the bank to government, because the government are involved in many activity which is related to economical activity. So the bank is acting like the major contribution for the government expected from the RBI. The government, they are committed for too many income and expenditure or infrastructure development. So which is acting like a custodian, which is acting like a treasurer for government. Now custodian of cash reserve. So here custodian of cash reserve means what? The RBI is completely taking all the bank responsibility. Each and every bank, those who are operating within our country, so they want to keep at least 20%. So they reserve in the RBI. Now RBI is collecting from the individual bank the deposit. So for example, Canara Bank. The Canara Bank, they accepted the deposit for 10 lakhs, assume 10 lakhs. Okay. So in the 10 lakhs, now the Canara Bank, the 2 lakhs they want to deposit in RBI. Deposit in RBI. So whenever RBI is received from the Canara Bank, so no doubt the individual bank, the Canara Bank is maintaining a cash reserve in the RBI, which is a compulsory guideline. They want to follow, individual bank they want to follow. That's what the individual bank, they want to keep the deposit in the RBI. So the RBI is taking a custodian responsibility. Now custodian of international currency, because RBI is acting not only dealing with the activity which is related to India country. So they are operating other activities like in between other country also. So when the international transactions are going on, so here the RBI is taking a responsibility for international transaction. So whenever the international transactions are going, somebody want to be a custodian. So now here for international transaction, RBI is a custodian. So lender for last resort. Lender for last resort means what? The individual bank, whenever they are expecting a money for any insufficient balance a individual bank are maintaining, finally the individual bank, they can approach directly for the RBI. So that's what, which is nothing but the lender of last resort, because the individual banking operation will carry with the help of currency or a sufficient balance. In case of insufficient balance, the individual bank, they can approach for the RBI. That's what, which is a last resort. The clearance house for transparent settlement. The complete transaction, either which is a development concept or payment system or receipt system, okay, or transferring a payment or receiving a payment. So everything will be a clearance house is completely taking a responsibility for RBI. So the payment is done. If you want to transfer cash, if you want to transfer any settlement which is related to payment system, so because the government also committed number of expenditure, the final settlement will be RBI taking care. So the controller of credit. Here the controller of credit, which is expected question from the credit control. So there are two major weapons we are using, qualitative and quantitative. So the complete credit control, the rate of interest, either exchange rate or repo rate, so the credit limit, so individual bank what and all they want to set for the interest, everything the RBI is controlling. If no one is controlling, the individual bank as they think they can operate, so that's why the credit control will be taking care, the responsibility is taken by RBI. Last one, protecting the depositor for interest. So because any bank is operating, unless if they don't have any depositor or customer, so either which is a individual person or businessman or any organization or any government, so their depositor, they want to get a safety. That's why, so the protecting a depositor interest, RBI is taking a responsibility. So that's what. Keep on watch for next section. Thank you.